Hey guys, welcome back. So I wanted to do a video on the reasons why I like rentals versus REITs. So first, let's start with the definition of a REIT. For those of you who don't know exactly what a REIT is, a REIT stands for a real estate investment trust. And that's a company or a stock that owns and operates income-producing real estate. REITs are modeled after mutual funds. REITs pull the capital of numerous investors. This makes it possible for individual investors to earn dividends from real estate investments without having to buy, manage, or finance any of the properties themselves. This makes it possible for individual investors to earn dividends from real estate investments without having to buy, manage, or finance properties themselves. I get a lot of questions of my opinions on REITs versus rentals. I definitely have an opinion, and here are the 5 reasons that I believe rentals are better than REITs all day long. So if you guys like these videos, just hit like or subscribe so you don't miss out on any future videos, because I'm trying to put out at least a couple a week. The first thing that I love about rental real estate is that you're in complete control. When you buy a rental property, you are in control. You call all the shots. This means you get to determine what upgrades to make to the property itself, what the monthly rents will be, how to market the property to potential residents. And while this requires active management and active work on your part, you can rest assured that you're in complete control of your investment. Also, you are able to decide on what you actually invest in. A big issue I have with REITs is that you don't know the person or the acquisition that they're actually buying. You are trusting someone you don't know to handle your own money and make your investments for you. Number 2, tax deductions. This is a huge pro for rentals. When you own a rental property, you are able to deduct the majority of the expenses you incur in managing and renovating the property. Depreciation is your best tax strategy. You cannot write off a REIT investment. You will pay tax on the full amount earned, which could be anywhere from 20 to 50%, depending on your taxes and what income bracket you're in. Number 3, you need an education. Why do I think this is a pro when it comes to rentals versus REITs? Because it gets rid of the lazy people. When you talk to a REIT salesperson, they will tell you the benefit of a REIT is that you don't need to understand real estate at all. To me, it sounds a little foolish to just give your money again to another wealth advisor and have them invest your money for you, specifically because you don't even know what they're investing it in. And with a rental, you know exactly what you're investing in. But it does take a little more education, that's for sure. But it does weed out the lazy people. Number 4, high barrier to entry. So obviously, if you're buying a rental property directly, you have to have your money or an investor money, and you have to go out, find a property manager, a whole team, and put the loan around that and be able to qualify for the loan, either you or the property. That's a lot of work. However, it does weed out, again, the lazy people and the people that can invest small amounts of money. You do have to have an education, and you do have to be a little more sophisticated to invest in real estate directly. So this is obviously in direct contrast to investing in REITs, where you can gain real estate exposure with just a few $100. So why do I look at this one as a positive? Once again, it takes out all the people that want to do all the work. Yes, you do have to save for a down payment, but this is what sets you apart. Anyone can do that. But is it the best business you can start? Of course not. It's just the easiest business to start. Easier isn't better, and a lower barrier to entry just means that more people are going to be doing it. As you know, when everyone's doing it, this is probably not where you want to be spending all your time. Number 5, you own a physical asset. This is the biggest factor in my opinion. When you buy into a REIT, you own a piece of paper. You don't actually have any control or knowledge of what that REIT is going to do next. You don't know how they're going to manage the property. You don't know how they're going to refinance the property. You don't know how they're going to sell the property. You don't know anything other than the REIT price, just like a stock. With real property or rentals, you actually have a physical asset. With REITs, you have a piece of paper. Even if the market turns and you have to lower your rents to get the place leased, you still own a physical asset. And having physical assets are very important during tough times. Because physical assets actually hedge inflation. They are inflationary. As inflation rises, so do asset prices. The REITs prices and the values and your stock price will depend on what the actual REIT invests in and how that fund is managed. With REITs, again, it's just a piece of paper, and you're literally a witness watching the real estate happen or being managed the way that that REIT particularly wants to manage it. And you have no control or say or decision making on what exactly they're investing into. So that is my opinion on REITs versus rentals. Please leave your comments below on whether you agree or disagree with me, and most importantly, why. Thanks for listening. Hey guys, if you could do me a favor, I'm always trying to grow my community. So if you could just hit the subscribe button below, you'll never miss one of my videos. And also there's a link to my newsletter below so I can stay in touch with you. Thanks again.